Hey everybody, I hope everyone is doing well and had a good day. In this video, we're going to review the E-mini S&P 500 5-minute chart for Thursday, June 25th, 2026. On the daily chart, the market is in the middle of a trading range. To market mostly going sideways through here, a couple legs up, bear breakout, deep pullback, getting a second leg sideways to down. Here, after the market tested the all-time high, there's a 3-bar micro channel followed by a pullback and a gap down, which is basically a bear breakout, a second leg down. And the market's testing that target price, and we've been going sideways there for 2 days as we go into the day. So the expectation going into the day, a couple of trading range bars in the middle of an overall trading range. There's probably sellers above yesterday's high and buyers below yesterday's low, and overall mostly expecting more sideways today. Here's the 5-minute chart. The market had a gap up going into the day, and this is part of a bull micro channel, so several bars up with trending lows, and this is good for the bulls. It's a pretty strong rally. However, when you look to the left, overall, the market is in a trading range, and we're testing close to yesterday's high, which is expected to be resistance. It's a fairly big bear breakout bar for bar 1. Bar 1's probably going to get some kind of second leg sideways to down. But we cannot forget about the rally from bar 75 to the open of the day. That's a pretty strong bull micro channel. And you know that there are probably trapped traders somewhere down here. The market was in a tight trading range, and we got this big bull breakout. So there's probably buyers support somewhere down here around yesterday's low or somewhere around this tight trading range before the bull breakout. And that's probably going to lead to some kind of second leg sideways to up. A follow through bar on bar 2 for the bears. It's good for the bears. A couple of bear bars, both closing near their low. The bulls may wait for that one more leg down before they look to buy. I said the micro channel is probably going to get a second leg up, but when you look to the left, the market is in a trading range. And when the market is in a trading range, the pullback can be very deep. It can be deeper than 100%, which is, by that I mean it could fall below bar 75. And the same goes for the bears. Bars 1 and 2, it's a breakout signal. It's probably going to get a second leg down. There's probably sellers above bar 2. And then 3, a strong breakout bar. Very little overlap. Good momentum for the bears. Bar 3 is probably going to lead to more selling. And it's a 3-bar micro channel, 1 through 3. That's probably going to get a second leg down as well. Big up, big down. Going into the day, probably sellers up here and buyers down here. Resistance above, near the high of the range, and support, buyers below, near the bottom of the range. More selling on bar 4, probably sellers above bar 4. It might be sell to close 4, but the location is becoming less and less ideal as it gets closer to support. It's probably buyers below 4. And 5, bear breakout bar. So strong bear breakout on the open. The first 5 bars of the day. It's a pretty strong micro channel. We had the strong micro channel for the bulls into the close, followed by a bear micro channel on the open today. So again, big up, big down situation. Just means that the market is probably in a trading range. There's probably sellers up here near bar 1 and buyers down here near yesterday's low. Small follow-through bar on 6. So it looks like momentum slowing down for the bears, a much smaller bar than the other big bear bars earlier in the day. And then a bull bar on 7. So we're finding some buying below yesterday's low. Strong enough bar on 7. It's probably going to get a second leg up of its own before the bear micro channel gets a second leg down. The reason bar 7 is probably going to get a second leg up is because of trapped traders. Everyone's selling the close bar 6 or selling bar 5. They're trapped by bar 7. So the traders selling, bears, when they get bar 7, they can either exit above 7 and look to sell higher after the bulls get their second leg up, or they can stay short and scale in as the market goes against them. Bulls can probably buy for a scalp, but big picture, this is probably going to be a leg in a trading range for the bulls. Overall, this looks like a trading range. I don't think either side is really in control and trending in either direction. Follow through buying on bar 8. It's good for the bulls. There's probably buyers below bar 8. It's a weak sell signal bar, consecutive bull bars. And again, a second leg up likely. So the first reversal attempt will probably fail, become a pullback that leads to another leg up for the bulls. So the first sell signal after this bull micro channel, even though bar 9 looks like a good bar, and maybe it's around the 50% pullback of the sell-off, it's not ideal for selling. It's a relatively small bar after the strong momentum by the bulls. If anything, there might be more buyers below 9. They may not come in until below bar 8. I do suspect there's more buyers below bar 9, and that the bulls will get a second leg up before the bears get their second leg down, or at least an attempt at a second leg down. I also don't want to overlook the micro channel 75 to the open, because it's really fascinating what happened today. From 75, this is a micro channel, and I'm including the open of bar 1. Like I said, a gap functions like a breakout. So from the close of 81 to the open of the day, there's a space between these prices, and that's basically, you can imagine it's another bull breakout bar in the micro channel. So from the low of 75 to the open of the day, which is the theoretical high close of the bull breakout, here's the measurement of the breakout, the bull trend. And if you bring it down to the lowest part of the pullback, the bulls have a target here at 74.71. So I'll just mark that as kind of the one of the targets for the bulls. Now we have a pullback as the market fell below bar 9, buyers below 8 and 9, but there's probably now sellers above bar 9 as we approach resistance in the trading range. We're in the sell zone of this bear micro channel. And we know that breakouts, once they pull back, they enter the channel phase. And once it's in the channel phase, traders are buying below bars and taking profits at new highs. So we can find some profit taking above 9, another sell signal 11, but similar to 9. Now it's a tight channel with a weak signal bar, probably buyers below bar 11. The market continued up here without pulling back. Another micro channel, 10 through 13, probably buyers below 13. It is 3 pushes. We may get a pullback here. But the tight channel from bar 6 to 13 will probably get at least some hesitation, maybe a second leg attempt. The bears need more selling pressure than what they have so far. 15, a decent bar for the bears, but that's kind of the minor reversal I'm talking about. Now we have 3 pushes up and exhausted bulls. Rather than buying up here, they're taking profits. They're buying a deeper correction, which we got on 15. They're buying below bars, maybe 12 or 13. Smaller time frame, it's more clear that there's a 2-legged pullback. From the high of 13 to the low of 14 is 1 leg, and then it pulled back. And there's a second leg down to the low of 15. So 15, there might be buyers in this area. As the market continues to channel up, there's probably buyers below bars. Plus, we had the moving average support as well. The market broke above the moving average, tested it, found support, tested it again, found support. What about buying 16? 16, not an ideal stop order buy. Maybe you can get a scalp out of it, but because it's a late leg, you're getting at least 1, 2, 3 legs up, and then you can count 4 pushes as well. So it's a late leg, late push, approaching resistance, the leg 2 measured move target for the bulls. which is near the top of a trading range. So not ideal to be buying up here. Probably sellers above 13, maybe sellers above 16, but they may wait to come in until above 13. Strong breakout bar, 17. The question is this a buy vacuum test of resistance? It's testing a bull channel line. It's testing a measured move target. It's at the top of the day's range, which is the top of an overall, or near the high of an overall trading range. So is 17 a good bar to buy? Or could it be the final push before we find sellers at resistance? Let's see if the bulls can get a follow-through bar. And then instead, there's a very strong bear breakout bar, 18, closing on its low. So now we have 3 legs up to resistance in an overall trading range day. The bulls just reached their leg 2 measured move, and now we have this big bear micro channel, 1 through 6, that is probably at least going to attempt to get a second leg down, and it may be attempting to do that here on 18. 18 is probably always in short on the close of 18, sell the close, sell below. Expecting at least 18 to get a second leg down, but also that this micro channel might get a second leg down as well. The rally, it's a spike in channel. It's probably going to at least go more sideways to down and test near the low of 10. But the rally here after the sell-off was fairly tight, and that's going to create support down here, like near yesterday's low, the high of bar 6. These areas are probably going to be support, which limits the downside. So the bears want a symmetrical second leg down, but they're probably going to run into support before they get it. 19, similar to 16, not an ideal place to be buying, especially after the strong breakout bar 18. There's trapped traders up here. Anyone who just bought 17 is trapped on 18, and they're hoping for any bounce to exit their position. So a pullback on 19, but it's leg 4 for the bulls near resistance, not ideal for buying. If anything, there might be more sellers above 19. And then outside down 20, follow through selling 21. So tight bear channel down to that bar 10 low. So we're testing support here, but the channel down is tight. That's a breakout on a higher time frame, and the bears are probably going to get some kind of second leg sideways to down. So selling here is okay if you're willing to use a wide stop and scale in. 22, reversal bar. It's a warning that we might pull back here. We found support here. And 22 is a strong enough bar. It may get a small second leg. It's unlikely to reverse this entire tight channel, but in a trading range, this happens more frequently. You need less, how should I put it? You need the amount of buying pressure required or selling pressure required in a trading range is less than what is required to stop a trend. So this is a minor spike in channel bull trend. I said here the bears did not have enough selling pressure. I think that's true. But once you get 15 and 18, now the bears probably have enough buying pressure, the bears have enough selling pressure to reverse this minor spike in channel bull trend. Now we have a tight channel, but it's still overall in this trading range. And the bulls have had some decent bars today with 7 and 8, 16, 17, even 19 closing on its high. So you get a bar like 22, that's probably reason enough for bears to exit and look to sell higher, betting that, yeah, it's a tight channel down to 21. It's probably going to get a second leg down, but the pullback might be deep. Follow through buying, so reversal and follow through, 22, 23, strong enough for a second leg up. There's probably buyers below 23. Micro channel, probably buyers below 24, as the bulls probably will get a second leg sideways to up before the bears get their second leg sideways to down. 4-bar micro channel, 25 sell signal, but because of the short-term buying momentum here, it's probably buyers below 25, and a second leg up still likely. Tight trading range through here. The bulls get an attempt at a second leg for the bears. 25 was a reversal signal, had a deep pullback, got a second leg sideways. And now the bulls will see this as a high 2 bull flag on 29. 30, the bears have a micro channel, but in the middle of this tight trading range, in the middle of the day's range. not ideal for stop order trading. There might be sellers above 30, sellers above 28, but selling here, I see the argument for selling bar 30. You're expecting the sell-off down to 21 to get a second leg down. Maybe the bulls have a completed structure. One of the problems I have, though, is that a lot of the time the market gets symmetrical second legs. So this signal 22 and 23. But the problem with selling 30 is that you're in the middle of this tight trading range. I was saying that a lot of the time signals, breakout signals, get symmetrical second legs, and the bulls have not reached their symmetrical second leg target yet. So the bulls may not be done here. Maybe this is a bull breakout, two-legged pullback, and then maybe the bulls get one more leg up here. We're finding buyers below bars. The tight trading range continuing. Bull breakout 32. Strong bar, probably going at least a little bit higher. There's a bull channel line here. Then there's also the leg 1, leg 2. Measured move target 59.75. You can see those prices are kind of in the same area. The bull channel line, the leg 2, measured move. So probably sellers above. The market going higher, 33, but tail on 33, finding resistance as we're testing the bull channel line and close to that leg 2, leg 1 equals leg 2, measured move. And then bear, reversal bar, 34. The high of 34 is 1 point below the measured move target for the bulls. Let me just make sure that's accurate. So 34, the high of 34 fell 1 point short of that target. And then we got the strong breakout bar, 35. So reversal follow through, 34, 35. The bulls, they fell short of their target by 1 point. But this might be an example of where close is close enough, and that's a close enough symmetrical second leg. And now you have to wonder, has the tight channel now had a two-legged pullback, and is this going to be a second leg down for the bears? 35, it's probably sell to close 35. Reversal follow-through signal strong enough for a second leg down. With the bigger picture, the sell-off down to 21, maybe getting a second leg down as well. And the bears ended up controlling price and time for several bars here. Here's the measured move target for down to 21. So that's 74.09, which takes you also close to the high of bar 6, the breakout point. So a couple of magnets down here. And then you can see the reaction of bar 40. The low of bar 40, 3 ticks above that target. So that's another close is close enough example. 3 pushes down from 10, 22, and 40. So there's a bear channel line close to support, low, and a trading range day. Couple legs down. And I said the rally, the spike in channel, that's a breakout on a higher time frame. This might be a high 1 pullback, high 2, a big high 2 bull flag for the bulls. So bulls will buy above 40, betting that the bull breakout to 17 is getting a two-legged pullback before getting a second leg up. As far as buying bar 40, I don't think it's ideal because of the micro channel down to bar 39 and 40. So there's probably going to be some at least sideways trading range price action before the bulls get that second leg up. And in other words, the micro channel is probably going to get at least an attempt at a second leg down. There might be sellers above 39. And the market entered this tight trading range for several bars. 40 got a two-legged pullback and a second leg to bar 45. So now it's 2 legs sideways to up to resistance, micro channel, basically low 2 at the moving average. There might be sellers here for an attempt at another leg down, which the bears got on 46. 46 an outside bar, but breaking out further above 45 than below 45. And in the bigger picture, in the grand scheme of things, the market is probably closer to support than resistance. And now this might be 1, 2, 3 legs down in a trading range day. So there might be more buyers below 46. 46 might be a strong enough signal. It's a breakout bar that it gets a second leg sideways to down, but it may pull back first. 47 for the bulls might be leg 3, not ideal for buying in this tight trading range, probably sellers above. 46 getting a two-legged pullback and then a second leg down, 51, 52. Now 51 and 52, testing that support bear channel line once again. 51, 52, breakout follow through, strong enough signal. It'll probably get some kind of second leg before reversing. So in other words, 51 and 52 traps traders up here. Anybody buying up here, bar 50, trapped on 51, 52, they're disappointed. So selling here on 52 is not ideal because it's testing support. However, over the next few bars, the expectation is that 51 and 52 gets a second leg sideways to down because of the trapped traders above. So what happens next? The market goes back to resistance, testing that area where traders were trapped, 53 and 54. Now 53 and 54, strong enough bull breakout and follow through that it'll probably get a second leg sideways to up. So the market is still continuing to go mostly sideways through here. There's probably sellers up here because of the trapped traders. Again, bulls who bought anywhere up here, bar 50, trapped 51, 52. They're able to avoid a loss. Let's say you bought bar 50, bought more lower, like below a bull bar, 47. Market comes back to your original entry price and you can exit at break even on the first entry and with a profit on your lower entries. So bulls might sell here. As they were trapped, they were able to scale in and then make money on their scale in entries. The bears who sold to close 52, trapped 53, 54, they can scale in, sell more higher, and then look for that second leg down to exit around their original entry, which they get on 55. Now 55, 3 legs down, 47, 52, 55. So kind of a nested late leg here on 55. Not ideal for selling leg 3 near support in a trading range. There might be more buyers on the close of 55. I said 53, 54, strong enough breakout follow through. It'll probably get a second leg sideways to up, but it's occurring near resistance in a tight trading range. So the pullback can be deep. As it gets a deep pullback, it's probably going to get a second leg sideways to up, and it does there on bar 56. So breakout follow through, deep pullback, bulls get there, measured move target. As far as buying 56, if you're going to buy 56, you have to acknowledge the risk that you're buying near the top of this tight trading range, but bigger picture. Remember earlier I said we have this micro channel. I said to bar 17, but even here, 6 through 8 is a bull micro channel that has not reached its symmetrical second leg target yet. So the bulls have that in mind up here. Leg 1, complex pullback, leg 2. So the bulls can buy above 56 with that bigger target in mind, seeing the bigger picture of the day, resistance somewhere up here. For the bears, I just said we have a nested late leg, 3 legs down to support. So as far as selling down here, it's really hard to make an argument for selling at this moment. So it's probably always in long above 56. 57, not an ideal entry bar for the bulls who bought, but if you're going to look at the bear perspective, do you really want to sell below 57? It's a trading range bar near the top of this tight trading range, but the bar 56 is a strong enough bull breakout. It's probably going to get a second leg sideways to up, so there's probably buyers below 57, traders scaling in lower, buying more lower, that are probably going to get a second leg up. And then 58, big bull breakout bar, but testing resistance. Look to the left, breakout point. And that's exactly where the market is testing. So there might be more sellers here, even though it's a pretty decent bull breakout bar. The market's right back at resistance. Inside bar 59. So we have a bull breakout 56, pause 57, breakout 58, pause 59. Maybe the bulls have one more push for 3 pushes up. Even if they do get that one more push, there's still layers of resistance above. Bull breakout bar 60, but still not breaking out above this resistance. Let's see if the bulls can get a follow-through bar or if it's a wedge on a lower time frame. So 3 legs up to resistance and then a strong breakout, bar 61. 61, strong enough bar. Expect a second leg sideways to down. Traders who bought bar 60 are trapped on 61. It's probably always in short below 61. Okay to sell 61. Scale in higher. The bulls might get an attempt at a second leg because it's a micro channel. But if anything, there's probably sellers up here around the close of 60. Buy signal bar 62. Maybe bulls can buy 62 for a stop order scalp, but I said the upside's probably limited to around the close of bar 60, and the expectation here is that 61 is probably going to get a second leg down before the bulls get their second leg up. And it looks like the bears are getting it here, 63 and 64. So the leg 1, leg 2 measured move reached on 64. It's a micro channel, 60 through 64. Probably sellers above 64, the micro channel, probably get a second leg down. So we find sellers above and more to the downside. Another micro channel, 65 through 69 and 70, probably sellers above 70. Once again, a micro channel, sellers above, second leg down. Micro channel, sellers above, second leg down. We find sellers above and another push down, but once again testing near support. So as far as selling down here, now it's 3 legs down. 1, pullback, 2, pullback, 3, nested 3. You can certainly find 3 or 4 legs down here on the lower time frame from 72 to 75. So it might be more buyers below 75. Traders betting on the breakout of the channel line failing, or you can wait for a bull breakout bar and look for a second leg up, like bar 77. Pretty decent bull breakout bar. The structure is good, 3 legs down, nested to support overall in a trading range day near the low of the day or the low of yesterday. So 77 will probably get a second leg sideways to up. I think it's reasonable to buy the close, scale in, and look for that second leg. Although at this point in the day, not worth trading. I'm talking about price action. In theory, I don't recommend trading past bar 75. It's just too late in the day, at least for me. And then the bull breakout signal grew from bar 77 to 77 and 78. And on the next bar, the bulls reached their measured move target as they tested near the bar 60 close, which I mentioned was probably resistance because of the trapped traders there. So you can see the market testing close to that price and then finding some selling. There's something interesting I wanted to talk about that I forgot to mention over on bar 21. When the market's in a trading range, you've heard this in the Brooks trading course, but I wanted to talk about an example on a live chart here. When the market is in a trading range, traders can make money buying or selling basically anywhere as long as they manage their trade correctly. So I want to talk through that here on bar 21. So if you think about bar 21, I said it's a tight channel because we have a pullback. Bar 20 pulled back above bar 19. Tight channel from 17 down to 21. That's a bear breakout on a higher time frame chart. And therefore, you can conclude that there are trapped traders and probably resistance above and a second leg down likely. However, the bulls have the rally to bar 17, about a 50% pullback, and testing support. I talked about the spike in channel structure, the start of the channel, the low of the channel, bar 10, being support. So on the close of bar 21, you can imagine that a trader can buy or sell And if they manage their trade correctly, they can make a profit. So we'll go through the trader who buys first. So let's say a trader buys the close of bar 21. They see 2 legs down to support in a trading range. And their premise is that, okay, the market is in a trading range here. The bull breakout is probably going to get a second leg up. The bears just had 2 legs down. The market's going to reverse for at least a correction, sideways to up for a couple of legs. So the bull can buy bar 21 and maybe put a target either at the high of bar 21 or the high of bar 20. And they can update their target as there's more information created, more information given bar by bar. So let's say the bull bought the close bar 21. They could scalp out at the high of 21, like I said, or they can look to exit at the high of bar 20, or they can take the leg 1, leg 2 measured move, 22, 23, pullback that takes you close to the high of bar 20. You can see how close the market got there, but now it's 3 legs up, or at least 2 legs up with the reversal bar. But in any case, you can see the bull had plenty of time to buy here and exit the trade with a profit. Now the opposite side of the trade, what about the bear who sells bar 21? The trader selling bar 21, their stop probably does not go above bar 20. It certainly does not go above bar 21. That would be a skunk stop. It certainly does not go above bar 21. That would be a, or ideally even higher. And this gives the bear room to scale into the trade if it goes against them, avoid being stopped out, and then eventually capture that delayed second leg. So the bear can sell, let's say they use 20 and 21, and their stop is a 150% pullback up here, which is above even this swing high. You can see that a trader using this signal, 20 and 21, they sell here. They're able to scale in. They could scale in at 25, 50, and 75% pullback levels. Their stop remains untouched. Their stop is up here. And that trader was able to capture a second leg down by bar 38. So you can see how a trader buying bar 21 and selling bar 21 can both make a profit if they manage their trade properly. So I thought that was a good example to talk through for today. All right, that's going to be it for today's end of day review. Thanks everybody for watching, and for more price action fundamentals and how to trade price action, please visit the Brooks Trading Course link in the description of this video. And once again, thanks everybody for watching, and I hope everybody has a good night.